Well, let's take a quick look at global markets. You can see the Dow Jones has come back. That is after yesterday's huge surge on the back of those latest developments in Donald Trump's global trade war. Oil and gold are steady. So is the Aussie dollar, which is now buying 64.71 US cents. A little bit of better news if you want to head on an overseas holiday.
For more on finance, we're joined by senior market analyst with stock market newsletter Marcus Today, Henry Jennings. Good morning, Henry.
Good morning, Bridget.
As we just saw, pretty modest there on the Australian share market. Why are we not seeing the big moves that we're seeing in the US?
Well, I guess there's a number of factors at play here, Bridget. One is that we're seen as very defensive, and when the US was crumbling away on the back of the Liberation Day and all the tariff turmoil, Australia was very much seen as a defensive market. We've got banks, we've got supermarkets, we've got those sorts of things which are seen as defensive and were kind of insulated from any Trump issues. So money did flow to Australia, and the bank sector got to extraordinary highs. CBA hit an all-time high. In fact, their results are out this morning and don't look too bad. But we were seen as a bit of a safe haven, and now, of course, the money is flowing back into the US and especially into those tech stocks. The FANG stocks were going nuts again last night, so they were up around 1.6%. So that money is flowing back into the US, and it's coming out of defensive stocks because it has to be, that money has to be found from somewhere. So gold has been suffering, and yesterday we saw the likes of Woolies and Coles under pressure, which have held up very well, and Telstra as well. So it is really, I guess, the money goes where it can get the most bang for its buck, and at the moment that is the US, and we're a little bit left behind, but we did fare pretty well during all the volatility, I have to say.
How will we fare, do you think, as this ongoing sort of unease continues between the US and China? Obviously, there were talks earlier in the week that suggested there might be a little bit of stay in those reciprocal tariffs that each nation has put on one another. Yeah. How could that help our economy, Henry?
Well, I guess our economy is very much tied to China, and the reduction in the tariffs is a welcome relief, I guess, for China. But it's still looking at sort of 30% in terms of tariffs. If they do something on fentanyl, maybe a 20% will come off that as well. So it is still a movable feast. But China has kind of planned for this scenario for a number of years. They saw this in Trump 1.0. And of course, also they have sort of diverted some of their production to other countries. But more importantly, they are stimulating their economy. They are cutting rates and trying to get their economy back up to that sort of 5% GDP, which they sort of mandate, although no one really believes it. But, on the face of it, that is good for the Australian economy. It should suck in more of our exports in terms of iron ore and coal, etc. And iron ore has been a slight winner since the Sunday or the Monday announcement, I guess, from Scott Bessent. So it has been slightly positive for Australia, especially in the commodity space, but a lot to play out, and a lot could change as it does, probably day by day for Donald Trump.
Yeah, just watch this space. Henry Jennings, thanks very much.
Thanks, Bridget.
All right, we're going